Hey everyone, I'm David Finz, and on this episode of the Cyber Insurance Imperative, we're celebrating the strong profits the underwriters are experiencing right now. Wait, what? Come on, Dave. I thought you were a broker. Why are you happy that the underwriters' pockets are getting fat? Simple. As I've said before, if the underwriters can't offer this product profitably, they won't offer it at all. And we want cyber to be around. It wasn't very long ago that some pundits were saying that cyber wasn't insurable. Yep, you know who you are. Well, Fitch Ratings gave us a sneak peek at their upcoming report on the health of the cyber insurance marketplace. And the news is pretty positive for underwriters, insureds, and their brokers. One of the ways that insurers measure profitability is through what's known as the direct incurred loss and defense and cost containment expenses ratio. That's a mouthful, but the bottom line is the lower the number, the more profitable a book of business is. And for standalone cyber coverage, which accounts for roughly two-thirds of the market, the ratio is essentially unchanged year over year, clocking in at 44% in 2023 versus 43% the year prior. Now, 2020 and 2021 were a bit of a rough patch for cyber underwriters, but taking the long view, the ratio stands at 48%, going back 9 years, even with a couple of eggs that the industry laid during the ransomware epidemic. So why the improved performance? Fitch attributes it to a combination of factors: premium adjustments, more careful risk selection, and mandating better security controls by the underwriters. There was also some paring back of coverage through sublimits and coinsurance, not something that I'm a fan of as a broker. But the bottom line is that the cyber product remains viable, even with the slight drop off in direct written premium from last year. 3% for standalone cyber and 2% when you include the package policies. Now, none of this is to say that there aren't some real headwinds facing the market. The SEC's new cybersecurity rule is bound to generate some costly regulatory proceedings, and the adaptation of AI and other new technologies are also creating new vectors of attack for threat actors. But insurers can also use these new technologies to bring efficiency to the underwriting process. Capacity remains strong, and in spite of some improvements in the take-up rate for cyber insurance among middle market and smaller businesses, there's still quite a bit of room for growth. Now, see, your underwriting submission tells a story, and Alliant can help you craft that narrative. With all the heightened awareness around the importance of cyber hygiene, businesses need to inspire confidence in the eyes of the underwriters. Gone are the days of the four-question apps to get a quote, but how can you amass all the information that's needed without shooting yourself in the foot? That's where our cyber insurability and risk assessment, or CIRA, can help. We sit down with our client's InfoSec team several months before their renewal and have a conversation with them around their cyber maturity. We then use this information to identify action items that need to be remediated, then put you in touch with qualified service providers who can help you get those controls in place. And if a simple yes or no answer doesn't do justice to your cybersecurity regimen, we'll help you explain your approach to the underwriters. The best part of CIRA is that it can actually serve as your renewal application, relieving you of having to resubmit that information. And the following year, you can just refresh the assessment. The result is a streamlined process that flags trouble spots before you go to the underwriters, and it helps you present your company's risk profile in the best possible light. This helps ensure better pricing and terms with a minimum of conditions or subjectivities that need to be satisfied before you can bind coverage. As I said at the start of this episode, the market for cyber insurance is improving, and if your cyber maturity is good, you should be able to take advantage of that. Our CIRA risk assessment can help you get there. Want to learn more? Please don't hesitate to reach out. You can DM me on LinkedIn or email me at david.finz@alliant.com, and I'll put you in touch with a member of our cyber risk consulting team. And if your current broker isn't having these sorts of conversations with you, maybe it's time that you discover the more rewarding way to manage risk. Thanks for watching.